Andrew Ver Planck, until last week, it was a great environment for short sellers. The bears were truly in charge. Can you talk about what it's like right now after last week's run-up?
So far this year, January was a great period for short selling, but now that the S&P has started to recover in February, it's become quite challenging. We still have several names in our portfolio that we're short that we do find attractive, but you have to pick your entry and exit points because there is the risk of a run-up in the market.
All right, well, one of the stocks you don't like in the MainStay U.S. Equity Opportunities Fund is Textainer. Now, they own and lease shipping containers. It's down around 20% so far this year, mostly over worries about global trade decreasing. How much further can it go down?
So Textainer is an interesting company. It's getting beat up for two different reasons, both because commodity prices are falling. So their containers are made out of steel, so the price of steel factors into the cost of the container. Also, global trade's been slowing down, as you noted. Both of those things are bad for the company. When we're looking for companies to short in our funds, we're looking for stocks that are expensive relative to their peers and have negative sentiment. This company has both, lots of short selling, and we think it can fall further. We don't put a target price on names.
All right, well, you're also short TWOU Inc. This is an online educational services company. It's lost about a third of its value so far this year. We're actually seeing insiders selling, so maybe they don't even want to be in the stock. Why don't you like it?
TWOU Inc.'s an interesting company. They're often thought of as kind of like a software version of a for-profit education company. However, it's more of an online classroom where they provide online classrooms to Tier 1 universities, but they haven't done very well. And a very notable short seller last October said the company was 65% overvalued. And they also noted that 85% of their revenue is from 4 customers. And they just haven't made money since inception, since they founded the firm. And we think it's going to continue to be unprofitable.
All right, and then finally, you are bearish on Wynn Resorts. Now that illustrates the dangers of short selling. Stocks up, I guess, from 60 to 80 in the past 2 or so weeks. It's really got a nice bounce because of optimism about its Macau business. So tell me what you think about Wynn right here.
So Macau's been a problem child industry-wide. Any casinos that have exposure to Macau have been feeling pain. China's been cracking down on corrupt businessmen that like to go there and play big. Those volumes are down, and also the Chinese economy has been slowing, so people have less money to go gamble. I think you really have to decide, is China recovering or not, to decide whether or not that's a good short or not. We haven't seen that yet, so we're going to stay short the name.
All right, thank you, Andrew.
Thank you.
Thank you for watching The Street.